I'm a big movie fan. I feel like I can learn a lot about people from what is your favorite movie and why?
My favorite movie of all time is Good Will Hunting. And it's because of the depth in that experience of somebody who's got all the potential in the world and fights against his own success. Because that was the story of my life until I got married and got some things figured out. It was fighting against my own, sabotaging my own success. Because what if I try and it doesn't work?
Yeah.
And so I really connected with Matt Damon in that. I, of course, love Robin Williams in that. This year's CE, we do Goodwill Lending.
Nice.
And so we have a loan officer who has a therapist, and he's like, I just thought May 10th, the rates would go down. And he's like, it's not your fault. He's like, I just thought. So yeah, it's going to be awesome. But that's hands down my favorite movie.
Such an amazing movie, man. And like everything about the young relationship between Matt Damon and Ben Affleck, like it comes through in the movie that they were already best friends who were like doing shit together. Cause at some point they're not acting. They're just like, they are who they are. Welcome to the On the Edge podcast with your host, Scott Groves. Hey, good morning, good afternoon, good evening, folks. Whenever you're watching the On the Edge podcast, this is your host, Scott Groves. I'm with my old friend, Ken Perry here, who, if you're in the mortgage industry, you don't know that you know this guy, but you know this guy. Ken is the owner of the Knowledge Coop, which is probably the largest or fastest growing delivery of basically mortgage training. So anytime you've had to take your sexual harassment training or your HMDA data training or your compliance training or your continuing education, like Knowledge Coop does some of that. They do a lot of guideline information. They are basically the repository of information training in a technology wrapper for the mortgage space. I hope I got that right, because I know you guys do a whole lot of different stuff, but I want to hear about your journey from like loan officer to like building a tech company to getting out of the day-to-day of having to answer realtor calls and make a real business and a real lifestyle for yourself. Because I think a lot of loan officers dream of like filling some missing niche in the mortgage business that doesn't revolve around calling and begging for business. So I want to hear about that. And then just want to hear about your journey into like mortgage and tech, because those two don't usually go together. When I'm talking to people, I'm like, yeah, technology in the mortgage space is about 15 years behind. And this is my podcast, so I can cuss. I've worked at many companies. Synergy One, where I work now, is actually one of the reasons I came here, is because all of our technology works really well together. But at previous companies, I had to have a full-time assistant to fix what I called the daisy chain of fuckery, which was like, this system didn't talk to this system, didn't do this thing, didn't do that. Oh, these two technologies can't work together. Oh, don't worry. We're going to have the new CRM by Q4 of 2021. And here it is 2022 and we still don't have it. 2023, we still don't have it. So I just changed companies and looked for a company that had good technology that all works together. But that is a rarity in the mortgage space. So Ken, other than being a family man, I don't know a whole lot about you personally. Welcome to the show, and tell us your Batman origin story. Like, where did you get started, and how did the Knowledge Coop come to be?
Dude, thank you. That's a lot right out the gate. And I'm sure after you said compliance and the word HMDA, probably everybody just shut it off. So I'd like to just talk to you at this point.
Yes.
Probably just,
for the three viewers remaining, we appreciate you sticking around.
Yeah. Gosh, I have a problem that I always tell too long of stories. But I'll tell you just kind of the brief story. I'll start at being a loan officer. When I was a loan officer in Pleasanton, California, I was kind of got my job fresh out of college. I was a bartender, so with a communications degree. So I really had not many options. And the one that I chose was the mortgage industry. I got in because I had a buddy who was in the mortgage industry. He's like, dude, I have people that are hiring. I'm like, I'd like to make money. So literally the same origin story of everybody that got into the mortgage industry is you were doing something else and a friend said they knew somebody that was hiring.
Yeah, nobody actually grows up wanting to be a loan officer. No. And people always ask me, they're like, well, don't loan officers have backgrounds in like economics or math or what? I'm like, I know, no, those people get real jobs as like analysts and stuff. The mortgage business is salespeople who happen to learn math.
Yeah, no, that's fair. I never considered myself a salesperson. Every job I had from like the beginning of my life, I ended up being a trainer. And so I would always just fall in love with the job. Then I would fall in love with helping people see the light and helping them understand how to do that job best from, everything I've done. So when I became a loan officer, I just like talking to people. And so I remember when I first walked in, I looked around the room and I'm like, so who's doing the most loans? Like, I'm very competitive. And so I kind of looked around like, all right, how many does that person do? How many does that person do? And what was interesting is they're like, oh, that person does like 2 loans a month. And I'm like, why? How many can you do? And they're like, you can do as many as you want. And I'm like, well, then why do they do 2? Like, it fascinated me why somebody would do 2 loans a month if you could do more than that and you get paid more to do more than that. And so I was like, well, I remember asking the question, what's the cap? Like, how much can I make? Like, what's the maximum amount of money I can make? And the answer was, you can make as much money as you want. There literally is no maximum. And I'm like, well, then why doesn't everybody make the maximum? Like, I didn't understand.
Right.
And so I got in, I got the same training most people got, which is a phone and a computer, and go get them. And so nobody taught me what to do. I learned it the hard way by listening to other people and seeing what they were saying and asking a billion questions. But mainly I read guidelines every single night, because I'm like, okay,
Wow.
when you're in college, you're like, you're a kid, right? I was married at 20 years old. So I'd already been married a few years when I got in the industry, but I'm still a kid. I don't have a mortgage. I don't know how that works. And so I don't know a lot. I expect that somebody would teach me, but I also thought that when I looked around, everybody knew their job. I'm like, these people must all know what they're talking about because they make a lot of money.
Oh,
they didn't.
Contraire, mon frere.
They didn't. And I'm like, so I'd ask people questions, like guideline questions. And they're like, do you have one of those loans right now? I'm like, no, but what if I get one? Like, I don't ever want to be the dumbest person in the room. I don't ever want to, I want to prove myself every day. And so when I found out nobody knew what they were doing, I'm like, well, I guess I just have to read guidelines. And so I'd read till my head hurt every night. And then I would put it down. And the next day I'd wake up and I'd read till my head hurt. I would literally read until I get a headache. And I rarely get headaches, but I was filling my brain with a new language that is mortgage. And so, and everybody around me kept using initials and DTIs and LTVs. And now we have HIPAA moles based on the APOR. Like, there's so many things that like nobody stopped to be like, by the way, here's how you calculate that. And so I just learned it. I just studied, and I found that if I knew what I was talking about, I was way more confident. And so if I had just studied, like, I could have told you what the shared well agreement had to have in it in a countrywide loan. Like, I knew it all because I had to, because I never want to go in front of a bar not knowing. And so I quickly became their highest producing loan officer. And then I got bored. And my boss looked at me and he goes, dude, you're bored. And I'm like, how do you know? And he goes, because all you want to do is go walk around the office and teach people how to do it. And I said, yeah, that makes me a lot more excited. And he said, I'll tell you what, I'll make you a deal. I'm going to give you a new job. And I go, okay. He goes, we need a trainer because we're going to launch all these branches. We were going to launch 24 branches all over the country. And he wanted me to launch the western half of the United States as a trainer to bring these people in and train them on how to do things in our company and then bring constant training in. And I said, I've always loved being a trainer. And he goes, I promise you will never make more than half of what you made this year, but you'll be twice as happy. And I was like, really? And he goes, yeah, what do you care about? And I was like, well, I mean, I want to be happy. And he goes, I promise you happiness. Your heart will be full. And I said, all right, give me the pay cut. And I took a pay cut down to $51,000 a year as a national trainer, launching there was literally 2 of us that were launching all these branches.
What year is this for context?
99.
99. So, inflation equivalency, that's like making $120 a year right now or something like that, maybe.
Maybe. Gosh, are we that old? We might be that old.
We're old, bro. That 25 years ago with record inflation. Yeah. Yeah.
Is that 25 years? Dude, that's 26 years almost. Okay. So yeah, it was not horrible money, I guess. So I took the job and then pretty quickly figured out on that salary at the time, I couldn't buy a house because we were in the Bay Area. And so my wife and I started looking at houses and we finally found one that we made an offer on, lost it. Another made an offer on, lost it. Another made an offer on, lost it. And finally the realtor just kept creeping our offers up. Like, no, we need to offer this. And she was all in on us buying a house.
Right.
But we kept doing the math, and my wife is very risk averse and just doesn't like risk. And so she kept looking at it like we were both kind of getting caught up in it, like bit higher in my competitive nature. And finally we were making an offer on a house to go like, I don't know, 10% over asking. And I looked at my wife and I go, what are we doing? Like, we can't do this anymore. I'm not going to, Mindy wanted to be able to stay home and raise the kids for a period of time. She's a therapist, and so she can kind of adjust her schedule. And so I'm like, you're never going to get to do that. Like if we stay here. So we picked up and moved to the Northwest. And I went to my boss and I said, I'm going to go take an AE job, account executive job up in the Northwest. And when I do that, I'm going to be leaving this training job. And here's the funny thing. I would have kept the training job, but they had no way for me to log into the system remotely. So how far do we come as a country?
I know, right?
They didn't have an office nearby where I could plug the internet in, and they had no other way to do it.
And by the way, I just looked this up. A $51,000 salary in 1999 is worth $98,983 today. So almost the value of our dollar has lost almost 50% in 25 years.
Jeez, that's crazy. So yeah, we moved up to the Northwest. I took an AE job. My boss told me, he goes, here's the deal. You're going to do well as an AE because you like to talk and you like sales, but he goes, you're going to miss your first love, which is training, and you're going to want to go back to it. And when you do, you need to follow your heart and go back to training.
So for those people that are watching who aren't in the mortgage business, explain what an AE is in the mortgage space.
Account executives selling for the lender. I would call them brokers all day long, and I would do their jobs and then take the deals in the door, and then my company would close them.
Got it.
So it was literally my job to go golf with people and then help them package deals to be sent into my underwriters.
So when I'm trying to place a loan with, whether it's company A, company B, company C, you're the guy who I would call and be like, Ken, I got this really weird deal. It's good credit risk, but the guidelines don't really work. Will you guys underwrite this and approve this loan for me? And then, of course, you're an AE, so you just say yes no matter what. And then when I send the package in, you're like, ooh, now we got to really find a way to cram this square peg into this round hole. And then you're kind of doing customer service and you're doing sales and you're keeping me happy. So I send the rest of the deals to you instead of company A or company C because you're company B. And you're kind of like a jack of all trades as an AE, right?
Well, yeah, and of course, as you might guess, my gift and my unique selling proposition is that I knew my guidelines better than anybody ever could. I knew it better than my underwriter. I knew it better than nobody knew the guidelines better than I did because I read and studied them. And so when somebody called me, I'd ask them all the right questions and I'd get the deal done. And so I wasn't trying to bring in garbage. I was trying to bring in the right thing. And I knew what I could win, what fights I could win. I knew what fights I couldn't win. But it was also, I really like training. And so I just ended up hanging out with people that needed to learn the business and just teaching them the business. And so I didn't want the high producing loan officer. They'd already figured it out. I wanted the low producing to make them into high producing because I get a lot out of teaching people.
Yeah. And
so I got up here, started doing really well, but then I missed my love. So in April of 2003, my daughter was born April 2nd. I quit my job April 1st.
Oh, good plan.
Good plan. Yeah. And so, we had a baby. I quit my job and started this company. And really, it wasn't a technology company. I just wanted to train people because as an AE, you get these calls and people are like, hey, I want to run this deal by you. And I was getting calls like, I want to run this deal by you. Here's their name. Here's their credit score. Where do I go from here? And I'm like, what? Like income? Why? I don't know how to read it. And I'd be like, what? And I could see how much money these guys were making on a deal. And I'm like, how are you with that knowledge level getting paid that much money? And frankly, I didn't think some deserved the amount of money they were getting. They needed to go back and earn it. And so I wanted to help them earn it by being smarter, by being knowledgeable. And so, so I quit my job and started the training company just to teach people how to do the business, how to read an appraisal, how to read a credit report.
So this is 2003. You launched a training business.
Yeah.
Wow, man. Like I didn't realize your journey into education was such a long one. For some reason, I thought this was a newer thing, like in the last 5 years that you transitioned out of production. Did you ever go back to production to make some big boy money?
I love that you asked that question. So my daughter's an entrepreneur. My youngest just has my kind of, we're very similar. And so she's just like, I want to run my own company. I want to do this. I had me thinking back to when I started it. I actually realized after I started the company, I should have been unethical and just started the company while not quitting my job, because it would have been way easier for me to launch with money coming in.
Right.
I mean, I just thumbs up myself. That was awesome. I made, I want to say it was $40,000 or $50,000 in the first 2 months of 2003. I made $4,000 in the last 10 months.
Yeah.
Total, not per month. Total was about $4,000 in total. So yeah, I definitely was like, what did I do? And I'm watching everybody make all this money, but I'm like, but no, it's the dream. It's the dream. The dream doesn't bills. And so I'm like, I'll just do a loan. And so this guy, a buddy of mine called, he's like, hey, I heard you quit. You want to do a loan? And I'm like, sure, I'll do a loan, because back then you didn't have to be licensed. And so this guy calls me. I'm like, yeah, here you go. Shot him out a good faith estimate at the time. And he didn't call me back. And I'm like, I guess he doesn't want one. And I just went back to my job. And then my buddy called and he's like, yeah, my friend just called me and said, your fees were a little high. And I'm like, well, he didn't call me. And he goes, are you going to call him and talk to him? I'm like, I don't want to deal with that. Like, then I realized, like, it's kind of a full-time job to do loans, and I don't want to deal with borrowers ever again or have to go out and dig up deals. And I was like, it's a full-time job to do loans. I'm 100% committed. It is a full-time job to do mortgages if you want to do them right. And if I can't give it 100%, I'm not going to do it. And it also was distracting me from doing my mortgage business. So no, I took one application after starting this, and then just grinded.
That's wild, man. So, I know from coaching loan officers, it's an uphill battle to get loan officers to say out loud that they need help, whether they need sales coaching, and that's way easier than getting them guideline or trying to convince them that they need guideline coaching. But it's bonkers to me how many people in the industry just say yes, 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 yes. Try to cram that square peg into that round hole. And then, sometimes they get it done. Sometimes they don't. Sometimes they burn the relationship. But man, if it doesn't make it harder for the rest of us, because then I have, sellers or listing agents who don't know what they're talking about calling me like, I need a copy of the DU. I'm like, do you know what DU is? Hey, this quick interruption is brought to you by me, Scott Groves, the host of the On the Edge podcast. This podcast is brought to you by me. I'm a loan officer who can help you with a mortgage in all 50 states across the United States. I also coach loan officers. So if you are a home buyer who's looking to get a mortgage, if you're a realtor who's looking to partner with an awesome loan officer, or if you're a loan officer looking for coaching, get in touch with me. It's those sources of revenue that allow us to produce this podcast and get out a new episode to you every week for the last couple of years. So if you're looking for a mortgage, if you're looking for a mortgage lender to partner with, or you're looking for a mortgage coach, I'm your guy. Now back to your regularly scheduled programming. DU is self-input information. Like, I can put in that a client makes $1 million a month on DU, and it will give me a refer eligible, and you have no clue what you're looking at, Mr. and Mrs. Listing Agent or Mr. and Mrs. Seller. And I'm like, and second of all, like, I just can't give you all that client information if I wanted to. There's I have a fiduciary responsibility. And so the bad lenders in this business, and I'm not going to say I've never not messed up a deal. Like, I've had my fair share of delays and problems and reworks and refiles. But, I can count on one hand in 24 years how many deals we put under contract that couldn't close, And I'm just amazed at how many people just throw spaghetti against the wall and see what sticks. So what was your business plan going into this of like, man, loan officers are obnoxious. They think they know everything. They don't think they need to know guidelines. They think they're just a salesperson. I've got my LOA or my processor, or my underwriter to figure it out. Like, how do you go about building a company that trains people on the boring part of the business?
Well, back then it wasn't. I didn't do any compliance training when I started. If that's the boring side, but when I started, it really was out of a heart for, I couldn't stand watching people get in the business. And then, because I don't like risk either, I don't take a whole lot of risks. I take calculated risks, but I couldn't watch people with families tell their spouse, hey, I'm going to go do this job and I'm going to make us money, and then fail and have to go back and take on another job, or like lose the family savings. And I'm like, I can help that family stay, I can help that loan officer be successful so their family gets paid for this job, right? So, and then I would see people one guy called me and he goes, I have this loan, I got to go stated. And I go, why? And he goes, because the guy doesn't make enough money to make the mortgage payment. And I said, well, then why would you go stated? Like, where else is he getting money? He's like, he's not. He's W-2. I'm like, so you can prove the guy can't afford the payment? And he goes, yeah. And I said, and you want to do this loan? And he goes, yeah. And I said, you want to put somebody in a house and knowing that they cannot make their mortgage payment? He's like, yeah, that's why we're going stated. Did not understand. And I go, dude, I'm not touching that deal. Would you do that loan? And he's like, I guess I'll call somebody else. And I remember that phone call because it was one of the things that made me go,
Oh,
I need to clean this industry up and help people understand what they're doing to people. And these 80/20 stated non-owners on manufactured homes in a park with post and pier, like people were doing the most garbage stuff and just lying. And I'm like, I need to at least make sure they're making a decision to do it right, or knowing they're making a decision to do it wrong. And I can do that through education. Because
yeah.
once you know that it's a crime, you get to decide whether you continue doing it, but at least you had a fighting chance because now you knew, right? And so I wanted to teach those people. So it really was me trying to get people into the business and teach them really, like marketing was, or sales and marketing was like a whole day of my 5-day class. So
Yeah.
my vision was 10 people for 1 week at a time. And that was it. Train 10 people for a week on all the aspects of the mortgage business, and then send them out to be loan officers. And some of the people I trained in 03 and 04 are still some of the most successful loan officers in the Portland market, who went through my class. So it was really just me, here's a great tip for anybody who's an entrepreneur. Everybody who tells you they're going to use you for this business that you're about to start, is most of them are lying. And they're not being mean.
Take a deposit.
But they're
take
like,
a deposit.
Oh, dude, I'll totally do that. My gosh, yeah, that sounds great. Because people don't want to break your heart. And so they'll tell you things you want to hear, thinking that they're doing you a favor.
Mm-hmm.
Your best friends are going to be like, no, I'm not going to buy that. And here's why. And here's what you could do to change that so that I'll make that purchase. So when I was an AE, I was talking to my clients. I'm like, I'm going to start a training company. Would you guys send people to me that you hire and I'll train them? Oh, everybody's like, absolutely, dude. We're going to hire 20 people next month. Woo! Like, and I learned early on, they're all just making stuff up to make you happy, with good intentions. But I think I thought that it would just, money would flow, that everybody would send their people. And if you do the math on my original business plan, the math is really bad. Like, I wouldn't have made that much money at all. And then I got offered a speaking gig by the National Association of Professional Mortgage Women. Back then, one of the best associations in the industry. And so I was like, you want me to speak to the National Association of Professional Mortgage Women? And she goes, we'd like you to join too. And I'm like, okay, I'm a dude. And they're like, no, it is National Association of Professional Mortgage Women. We support women in the mortgage industry. You don't have to be one to join. And I heard their story of where they began, and I'm like, this is the most cool thing ever. The MBA wouldn't allow women into their meetings. And so the women had to go somewhere to get education. So they formed an association in the 60s that still exists. So I got a speaking gig, and this woman over lunch said, we want to book you for our regional event. What do you speak, or do you speak? I said, absolutely. And I never had. And I debated in college, so I know what I'm doing. And she goes, I go, what do you want me to speak on? And she goes, well, we want like a compliance topic. And I'm like, oh, absolutely. And I had read in the paper that morning the do not call laws that just passed. And I'm like, how about the do not call laws, like telemarketing rules for mortgage people? And she's like, oh, that would be perfect. So do that. And so I literally researched for 3 months, to call the FTC, just dug deep into this class, and then gave a speech on it. And it was stand-up comedy. And they walked away learning something. It was amazing. And I'm like, if I can make people laugh while teaching them, like, I want to do that the rest of my life. And I caught the speaking bug, and then it just went bonkers from there.
That's awesome, man. And it's funny because I think people, either because they're good-hearted and they don't want to break your soul, or the people are like, hey, do you want to get healthier? Yeah. Okay, cool. Meet me at the gym. Yeah, I can't make it. I'm really busy. I got to do this. I got to sleep in. It was a late night. It's like, okay, so you don't really want to get healthy. You want to think about getting healthy, or you want to talk about being healthy, but you actually don't want to take the actions, right? Like same thing with training or coaching or getting help. I mean, it's really hard. I've got buddies that need a lot of help in a lot of areas, myself included, and men tend to wait till the last minute. So, so you start, you kind of give this talk on compliance, and then where does the business grow from there? Because now, like, Knowledge Coop does everything, right? Guidelines, training, like you guys seem to be the one-stop shop.
Yeah. So from 03 to 08, it was me flying around the country speaking. I got booked by Option One University. I built a seminar called Be the Big Fish, which the concept of Be the Big Fish, and I still teach it. When you see people like hold a fish out, like, look at this fish I caught. I kind of flip that whole concept. Like it's like loan officers think they're the ones out there trying to catch the big fish that will feed them forever. When really, if you just focus on you being the big fish, then realtors will catch you and hold you up and be like, look at this loan officer that just did this. And your borrower's going to be like, look at this loan officer. And so I talked about the parts that you need to focus on to become the best loan officer in the business. And so I talked about read your guidelines. I talk about know your stuff. And that's where I kind of dipped into some compliance there. Like if you're telling them to do something and it turns out that's illegal, what's that do to your business and your reputation risk?
Right.
And so I built that seminar and spoke everywhere with that seminar. And then '08 hits, the market crashes. And when it did, we lost a
Small
ton
crash.
of money.
Small crash.
Yeah. We lost. I just told the story yesterday. My debt was going up every day because nobody could afford me anymore. Nobody was taking classes anymore. There was no required continuing education back then. So I had Oregon and Washington had it, but nobody else did. So it gets real hard. My credit cards stack up. It's me and my mother-in-law as my assistant back then because I had to let 2 other people go during that time. We had 4 people. We went down to me and my mother-in-law. She worked for me for 10 or 11 years, still freaking amazing partner in the business. And so I called Alaska Airlines, the B of A card to try and get $5,000 more on my credit limit. Because if I could just get 5,000 more, I felt like it was all going to turn around and we'd be okay. I have a $100,000 limit on my Alaska card because of that '08. Because I just kept having to call and get him to stretch it. And finally, I said, I just need $5,000 more. And she goes, okay, we got it approved. And I was like, oh, and just breathed. And I had this peace. And I look outside and an owl flew up and landed on the tree right outside my window and just looked at me. And I just found this peace of like, this is going to work. So so '08's horrible. And what happened was this kind of did some cool stuff. I went to my clients and I said, I'm going to give you a seminar. I was booking for $5,000 a speech. And so I went and said, I'm going to give you a seminar for $250. And it's called 5 Ways Out of the Funk, the 5 things you need to do to get through this difficult time. And so I went from a $5,000 speech to a $250 speech, still, made very little money that year, but invested back in my clients and said, I want to help. Like, I think we can do this. I think you guys can get through, but you got to do it right. And so I taught that. And then as we were coming out of that is when we launched the tech. And that was in 2012. We launched the technology.
Dude, to drop your speaking fee by 1/20th, to lay off the staff, to be going into credit card debt, a lot of people don't make it out of that spiral. Like they don't, obviously you had some maturity about you because you got married at 20, you opened a company very quickly after learning how to do loans. Like I just don't think most people make it out of that tailspin. Why do you think you and your family, your wife, your mother-in-law, why do you think you guys were able to weather the storm, right? Because there's a lot of people in 2009 who, still had their Rolex from the good days and they're waiting tables in Newport Beach, or they're serving coffee, or they're a waiter at CPK or whatever. Like, what was different about you guys and how you would either set yourself up, or your resiliency, or your faith in the business, or whatever? Like, how did you make it?
Good question. So interestingly, 5 years into the business, so that would have been '08. We're in the heart of the really bad stuff. It's April of '08. So companies are shutting down everywhere. We're not looking good. I'm scared to death. My wife threw me a 5-year business anniversary party. And we did that. And I looked at her and I'm like, honey, this is like, I don't know how many years I can make this work. Like this is a struggle. And she's like, do you know how few companies make it 5 years? And she gave me the stats. She's like, look at us. And that party like invigorated me. And then my business partner, I had a mentor who was my business partner for a lot of years. And he was just an advisor. And he called me up one day and he's like, how are things? And I'm like, they suck. And he's like, how? And I told him how much in debt I was. And he's like, why didn't you call me? And I go, I was embarrassed and ashamed. Like, look what I did. And he goes, first of all, do you think you're the only company to ever go into the red? And I said, yeah, it feels like it. He goes, every company goes into the red and then they work it out and they go back into the black and then things are fine. He said 2 things. He goes, do you still love what you do? I go, I love my job. He goes, do people still need what you offer? And I said, yeah. And he goes, then we keep going. And so he gave me that speech. So between my wife and Frank, I got that motivation to go better, with Pam working at the office, helping me believe. And then here's the funny thing, especially because the podcast that I had you on, I think I may have mentioned this, but I got this thing online that said there was a conference called DevLearn that was coming up, and it was a tech conference. It was like 2,500 to attend, I think, and I didn't have that kind of money. And I'm like, but I'm supposed to be there. And I went to that conference, and it was at that conference that I decided on launching the Coop. I met a couple technology companies. I'm like, we need a tech that can bring community to the mortgage industry. They can give them a place to go as a resource for training, that can give them all of the information they need. And then also they can help companies communicate with their people. Because I was noticing that in hard times, 08, 09, nobody was communicating with their teams. Like they were separate, and nobody was doing video conferencing back then or anything.
Right.
And so I came back from that conference. That was 2011, 2012. I meet my devs who are still my devs. They had a startup company that had just started. We started working with those guys, and we built the Knowledge Coop to give people a platform where they can go and train all of their people. So for companies, you can use our software to train your people, and then you can use our training to deliver training as well, and then organize all of your communication and all that. So I built that and went, I think this is actually going to work. And I can see like what might work and what might not work. I get it in my head. My hard part is getting people to believe, because I have ADHD. And so sometimes ADHD people or people with ADHD struggle with too many ideas. And so if I fire 50 ideas at you, but I know this one is really good, it's hard for you to be able to tell that that's the one that's good, because it's just like all my other ideas. And so I came back from DevLearn. I'm like, I want to launch this thing and it's going to be this. And my salesperson quit. She's like, dude, you and your freaking ideas, I can't support you. You're driving me insane. Let's just sell what we've always sold. And I'm like, that's boring. And we need to sell, and so I had this idea and then worked with the devs to build it. We put our first client on it in 2012. And then the tech's just grown from then. And then we bought the tech company in 2020. We bought that startup. And now they're part of our family.
And so tell us all the things that the Knowledge Coop currently does in its current iteration, because I use it for guideline searching. I use it for a bunch of stuff. And so what is the core offering of the business now?
Often. So Knowledge Coop does basically everything you need to learn, grow, and win in your company. So that's kind of our general learn, grow, and win.
I like that.
So it's our general concept. So we have two basic platforms, right? We have one for enterprises where a lot of our clients will use us as their intranet. They use us for all their corporate communication. You can upload a video straight off your phone into the system and assign it to people to show that they've watched it. And so they use it for all their corporate communications and corporate training. Our other side of it is the individual user, which is what we call Coop Plus. Coop Plus is where any loan officer can log in. You can use our AI tool for guidelines now. We just actually launched Fannie, Freddie, FHA, and VA AI, which is already saving deals all over the place. Because what we know is that a lot of underwriters do things based on how they've always been done, but they don't really pay attention to the changes. So you can go in there and go, like our favorite search is on FHA search, can I do a lava zone in Hawaii? And if you don't know what those are, Hawaii is zoned like riskier areas for a volcano. And so we just typed in, can you do a lava zone in Hawaii? And FHA comes back. Our AI goes, yes, you can. And here's how you do it. And here's what we need. And then gives you the guideline where it found it. And so now loan officers can get the right answers, turn that over and show it to underwriters and be like, actually, we can do this. And it's freaking amazing. You just have a conversation.
That's amazing, man.
And it helps you close your deal. It's insane. So yeah, they do that there. They take all of our training. We've got 100 hours of training we've created over the last 3 years. Knowing that the market would struggle, we decided to be ready for it by creating training that everybody needs and also training that new people need. So if you need to brush up on your S Corp versus C Corp versus, how do I read all these tax documents? If you want to brush up on rehab lending, Like whatever you want to learn, we've created content in there that you can learn. So think masterclass style training for the mortgage industry, with certificates and with all the quizzes and all that stuff. So we've got legit classes in there, along with all the CE and pre-licensing education that loan officers need. So yeah, and then we've launched the podcast Lessons from Last Time, which is funny. You were on that, and that is, man, that was another one of Ken's ideas that people were like, another freaking idea from this guy, and I'm like, no, but this is the one.
This is super cool.
I had to put this thing on my back, and I had to literally walk around selling this, like, hey, I bet this is going to work. And then and I was doing it at like the front office, just like, come on, somebody believe in me. And that was originally going to be lessons from '08 and what people had gone through and how can we plug those things in and get through this time. And what it ended up being is a lot of amazing stories, mostly from mortgage people. I don't know if you heard the Craig Davis one yet, but
I haven't watched it yet. No.
Dude, how do you tell your 11-year-old you have cancer? Oh. Like he goes through that process. There's been drug addiction. There's been we've talked through spouses with cancer. We've talked through, I mean, just some of the most difficult things in life that bring you that perspective of actually we are okay. Like the mortgage industry getting to be tough, that's the mortgage industry.
Right.
Your wife being in the hospital and you having to figure things out while dealing with struggle, like that's real. Yeah. And so the podcast is us sharing story. I don't care if it's a free podcast and I get nothing from it financially.
Right.
But the having somebody walk up at a conference and say, my wife has cancer and I've been watching your podcast and it's gotten me through is like, I'll take that over money every day of the week. So yeah, the podcast was originally an expand the brand kind of a thing. Like people will introduce me as the compliance guy.
Right.
And it's like, actually we do a ton of stuff and the tech is freaking dope. But as long as I'm thought of as the CE or compliance guy, then we struggle with, being kept in that box. So yeah, it's a lot better to be able to really showcase a lot of the other stuff that we do.
Yeah, because I believe at our company, like I get videos all the time that come out from like product update stuff and all that stuff's coming from like the big ecosystem that I'm in is the Knowledge Coop, right?
Yep. Yeah. Synergy One's been with us. I love those guys, by the way.
Yeah.
The Synergy One leaders are awesome. It's a cool company. And they've been using the Coop for years. So really solid group.
You know what I like is that, how do I say this politely? I've worked at other companies where they're super good at mortgages. And so they get this hubris of like, oh, well, we can also be a tech company and build this product that plugs into here. And I can go all the way back to like when I was the redheaded stepchild of Wells Fargo. We were called Home Services Lending something. We were like in-house for the Berkshire Hathaway products. And then they bought Prudential Real Estate, whatnot. Anyway, going all the way back to that, like Wells Fargo's like, again, the hubris. No, we're Wells Fargo. We'll build our own tech. We don't need to buy stuff off the shelf. And it's like, okay, well, $50 million in development and 3 years of delays later, you realize you can't do it. So one of the things that I've really respected about the team at Synergy One is like, they know what lane they want to be in. They want to be a great mortgage bank. And they're like, well, let's just buy Simple Nexus, white label it. Knowledge Coop, white label it. Use as much as they're not fun to use. Encompass is the 800-pound gorilla in the room. And it's like, you just get all the technology to work nicely together and let other people develop the stuff, right? Let Ken have the headache of like, oh yeah, how do we do an AI search for obscure guidelines like, lava rock in Hawaii? Because that's not the highest and best use of time of people who are trying to lead the direction of a mortgage company. And so you're really plugging that gap. And I mean, as far as I see it, I'm sure you do have some competitors. I don't feel like you guys have real competitors. There's little companies that do different pieces of what you do, but no one is holistic as like what you guys have built, right?
Which is a problem, right? Like actually having competitors is kind of nice because then it gives you a couple things. It gives you drive, but it normalizes the market. So we've always been first out the gate with a lot of stuff. Like our CE training, we were the first ones to do video and really funny video. Others are trying to catch us, but there's no possible way they can. So we basically compete with ourselves every year. We were the first ones to use humor in CE, but when you're the first ones, people have to go, wait, humor? Like we literally had somebody that was a compliance officer that was like, we don't believe that there should be humor involved in serious training. And we're like, your loan officers must love having you as their compliance officer. Like
Right.
it's hard to be the first out. And then with what we've done with the social learning side of things, we're the only platform in the mortgage industry that you can use your training, our training, but also have massive communication internally with your company. And so being the first one means people don't have a place for you. And so we'll talk to somebody and be like, they're like, yeah, we need CE. We're like, right on, let's open up the conversation because we also have all of these other things. They're like, we don't know what that is. They want to go take CE, move this other company out, move the Knowledge Coop in, which we appreciate when they do that. But also, let's get rid of your SharePoint because everybody hates SharePoint. Let's get rid of that. We can do internal video conferencing in, but you're going to use Zoom. So the trick is getting people to understand your use case when they don't currently communicate effectively in their company.
Yeah.
And
by the way, I think solving
that.
I think solving that problem is going to even become more critical, right? Because the idea of getting processors and LOAs and loan officers back into the same place. I mean, thank goodness I was able to find a partner loan officer who happens to live right down the street from me. But my loan manager is in San Diego. My LOA/loan partner is in LA. My underwriter is in wherever she is, Colorado or something. And it's like, luckily we're all West Coast teams, but I've had other teams where it's like, oh yeah, the manager running the pod in Phoenix is in Louisiana. It's like, well, how does that happen? If they have kids, just like the time difference is like, I don't want them to be a horrible parent, right? But I also need them to be available right in the middle of dinner time because that's when I'm trying to close up my day. And so I think that that digital internal concise communication versus we have 9,000 emails a day we have to respond to. That's just going to become more and more relevant as people become more and more detached from like the office.
Yeah. When the thing we were trying to solve is the amount of people asking the same exact freaking question. When somebody wants to know what the guest Wi-Fi password is at corporate, the same people are getting, they're like company all an email. Does anybody know the guest Wi-Fi? Like there's certain questions that don't need to be asked 8,000 times. And so we kept meeting with people that are like, I have a PDF with all my answers because every time I get this stupid question, I just copy paste it from the PDF. And it's like, why don't you answer it in one central database where as I'm typing, I can search for the answer. And if I find it, I don't have to bug you.
Right.
And so we save hours of underwriters' times, hours of processors' time. Like just ask it in a place where we can actually get the answer and make that answer searchable. So if you're rolling out Encompass, you should just ask and answer every question people are going to have. And that way, when they type the question, they get the answer.
Yeah.
And if it needs to be updated, they'll be like, is this currently the answer? It goes forwarded back to the person that answered it. They can then answer again. Like, let's keep the open communication so we're not having to deal with these like siloed departments not knowing what everybody else is doing.
I love it. And, AI is obviously one of the big buzzwords of today. But what does it mean when you're bringing AI into guidelines, right? Because how do I put this politely? I have wanted to see mortgage companies do one of two things. Hey, we're going to have this massive cost savings where we get rid of all the human underwriters and you follow the letter of the law of DU or the guidelines, and that's it. There is no exceptions. There is no interpretations. There is no anything. But you're going to have the sharpest price in the market because we have no unders. We have no humans. It's all underwriting. It's all automated underwriting. But you're only going to be able to do like 60% of the deals you think you're going to do because there's no room. Or we have to have top-notch underwriters who understand how to fight the fight with Fannie and shove the deal down their throat and interpret guidelines because they are a guideline, not a rule, and some make sense stuff, right? And what I feel like the mortgage industry has, this is not unique to the company I work for or any other company I've worked for, I feel that we have is like a mixture of the two where it's like, well, when it's convenient to go to the guideline, we do that. But when the underwriter wants to say, well, no, my interpretation is different of this, they go to that. And it's like, we just live in this half pregnant world all the time in the mortgage industry, which is quite frustrating.
It's super frustrating. And I mean, so I wish I would have had this AI tool when I was a loan officer because I had to read all those guidelines. I still recommend everybody reading guidelines, right? Nobody wants to. My favorite statement is you're not going to get replaced by AI. You're going to get replaced by somebody who leverages it better than you.
Yes.
So with our AI, you're using it to just show what Fannie, Freddie, FHA, and VA have said about that thing, right? So you're finding deals that you didn't know existed, and then you're just showing it to the underwriter. The trick of underwriters is we could have fewer underwriters or
Yep.
underwriters who are doing more things.
Yep.
If we use AI to make that job easier. One of the scariest things is when somebody says that, they don't want to use technology because what about my job? You're going to need to figure that out because you'll be beat by somebody that leverages that technology.
Yeah.
So the big thing is if we can now think about this, if we can make AI make underwriters' jobs easier, make loan officers' jobs easier, what else could they be doing? And with all the stuff happening with NAR, and the chance of now we're seeing a lot of realtors jump over to the mortgage side and get those mortgage licenses.
Yep.
Could we have underwriters and processors verifying, documents, following up on the appraisal or on the what happened to my brain just now? When they go in and find out, they do the holy wow, look at this. When they go in and do the inspection. That was a hard word to come with. Could they be following up on inspections? Could they be following up on addendums? Could they be creating addendums? Like, what could we do at the mortgage level that is currently being done by other areas? And so expand our brains to go, shoot, an underwriter can do more than underwrite loans because we can take a lot of the burden of the underwrite off their hands, and then we can utilize them in different areas potentially, or to do, bigger things. So
I tend to believe that most underwriters I've ever worked with are smart people. They're intelligent. They could be forward thinking if we empowered them to get out of this lane. And what I mean by that is, like, in the current infrastructure, underwriters are so in their lane. I had a second mortgage. The guideline was you were good to go up to a 50% DTI. I don't remember what happened. The insurance policy came in higher, or they did some update or whatever. And it's like a $150,000 deal that we're trying to get to closing. And I get the deal kicked back, and it's like, hey, everything's clear to close. All the conditions are clear. But we have a DTI of 50.2, 50.02. Let me know what we're going to do about it. And it's like, come on, man. You literally, if the underwriter was empowered to, like, be a partner of the salesperson instead of just like, I'm doing my guidelines, I have my checklist. It's like they could have called and asked the insurance provider if they could drop the premium by $100 somehow by increasing the deductible. They could have called the client and said, hey, are you willing to pay off this one $30 credit card so we can avoid this $30 payment? They could have, drop the interest rate by 0.1%, which they all know, even though they're not supposed to know what pricing happens. They all know that we have some pricing concession authority. But it's like, instead, what we did was, because everybody just has to work in their box, in their lane, they kicked the loan back to the processor who was leaving for the day, so she doesn't kick it back to me till the next day. Then I've got to, come up with one of the 72 solutions that will drop a DTI by like 0.3 or 0.03%. Then we got to make a round trip to the underwriter. Oh, shoot. She's having a procedure, so we've got to assign it to another underwriter who has to look at all the conditions. She can't get it on her desk until tomorrow afternoon. And now all of a sudden the docs are coming out like 4 days later than the client expected. Not a big deal, like not the end of the world. But just that whole process ate up so much bandwidth where it's like, if the busy work of that underwriter is being taken care of by AI, automation, clarity, something, then it's like, oh, okay, cool. Now all of a sudden we open up bandwidth for people to be a little bit more customer service representative and a little bit less like, I have to do the check the box items. And do you think that's coming with AI? That was a long complaining rant of mine to say, is this coming?
AI will help with that for sure. But what you're calling out is something I'm trying to solve, which is we don't train anybody. Like, the mortgage industry does not train. We train when it's required, but outside of that, like, you get a seasoned underwriter, how many times are they being sat down, being given like new tools or new ways to look at things? Like, put 5 underwriters in the room, give them the same scenario, and show me 5 results. At a company, that should never happen. They should be running scenarios constantly, especially right now when they've got time. Hey, here's a scenario, 5 underwriters, give me the results. Okay, yes, no, no, no. Here's what you should have been looking at differently. And here's
Right.
where we can make that thing move. So that's up to the company to train their underwriters on how to think outside the box and do those things. I believe in people and I believe in process.
Right.
If I have to choose one, the process keeps everybody employed.
Right.
Right.
I agree.
So if we have a broken process, then we need to go fix that broken process. And if we don't fix that broken process, we're going to be spinning around the circle for a while. Go read anything from W. Edwards Deming. He's the one who came up with the concept of Kaizen, or at least brought that to Toyota, revolutionized Toyota and a lot of Japanese manufacturers. His whole concept of build quality into the process. Like, stop doing QC later. Why don't you just do it as you go and make everything better? And I think the mortgage industry needs to fix that. So yeah, we're going to help them stop with errors of we can't do that when actually you can. The guidelines say you can. So we can stop those errors, but we're not going to help them think outside the box unless the company says this is what we as a company believe should be happening here, and then they establish consistency.
Yeah, I love that because, I find that I won't name the company, but I have a coaching client who he's having a big fight right now where they got a new underwriting manager. New underwriting manager really wants to show what he's made of. And he's like, hey, guys, going forward, we're going to have all PUDs. We need effectively like a condo cert. And it's like, well, no, that's actually not a guideline. Well, if you interpret the 2001, or maybe it was 2011, more than 10 years ago, guideline change, maybe we should be getting, PUD certifications and blah, 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 blah. And this is getting really into the weeds for people that aren't mortgage people, but I have to imagine they've already checked out. But he's like, look, man, like, you can't do that. Most of these PUDs have one dude who's old and retired and doesn't want a fax machine. Like, you are going to delay every closing. And can you just show me where this is in the guidelines? Or where we have the data that we're buying back a lot of loans from Fannie Mae because, we didn't have some PUD certification. And he's like, no, we can't show you that. You're the loan officer. I'm the underwriter. We're just going to start getting this. And he's like, okay. And, he's escalated all the way up to the CEO of a major company. He's like, I just want to let you know, your big push this quarter is recruitment and retention. And when word gets out that every deal is closing late because we're trying to track down 87-year-old Bill to send in the PUD certification to prove that like there's no, shared road agreement or something. I just want to let you know recruitment's going to fall to zero. And this comes from like a lack of training and a lack of cohesive communication between sales and ops and underwriting. And I get it, man. Like, I don't want my company to go bankrupt because they have to buy back a bunch of shit loans.
No, but that's real data. But like, if really that's going to happen, sure.
Cool. But like, we can't just be making stuff up.
Yeah. And that's where, like, in the Knowledge Coop, you can ask your questions in the Coop. Think of a Facebook style thing where you're like, can I do this loan? Your underwriters are in there answering. So if something comes up that's like, wait, that's insane, you just tap your manager on and be like, hey, check out what just happened, instead of a bunch of forwards of emails going everywhere.
Yeah. There's kind of like a blockchain explanation of like how everything went down, right?
Yep.
I have to ask because I'm nosy. What are your development costs, bro? When I think of taking something archaic like the Fannie Freddie guidelines or the VA handbook, and then getting that searchable and AI integrated, like, are we talking about like a couple $1,000s or like hundreds of thousands of dollars in development that you guys have spent over the last decade?
We've had 4 of our devs have been with us for 12 years, and then 2 of our devs are new over the last 3 years. But we just have salaried developers that we pay to do all of that work. So we're not paying on a per basis. We're just going, we brought in this guy as a consultant who's a freaking beast, genius of a man, systems guy, did a startup in the Silicon Valley, grew it a ridiculous amount of money. And so he came in to look at everything, and he's like, oh man, I've got a better way for us to do this. So now we do everything on sprints. So we have a 3-week sprint of product, 3-week sprint of development, 3-week sprint, and they go simultaneously. So like, I can tell you what's going to come out in the next 3 weeks. In fact, we're 2 weeks into our current sprint. And then when we're done with that one, we'll go at the end of 3 weeks, go to another one. So we're banging product out constantly. And they're never bored because they've got so much growth. And then the whole process, like I sign off on, yes, this is exactly what we want in the next 3 weeks. It gets handed off. I sign off like, yeah, this is what we got. So it's a amazing system right now, and it gets better. And we just launched the app, Knowledge Coop Plus app. You can get it in the App Store or on Google Play. We did that December of last year. So they just pump out a ton of amazing stuff, and they're part of the team. So
Yeah.
they brainstorm with us. It's not like we're sending them requirements. It's like they're on the brainstorm calls going, we want to make sure loan officers will buy this. Like, what is it that they will, be helped by? So yeah, they're genius.
Like, as the CEO of the company, that's your role, right? You're the CEO of the company. Is that correct?
Yes.
Okay. As the CEO, is this your full-time job, is basically envisioning the roadmap of how we get better, how we add more value, managing the projects? Like, do you have a 3-week, 3-month, 3-year roadmap for where everything goes?
We do. That's not my job though. Like I used to have a lot of jobs, because anytime you're a founder, you end up picking up quite a few roles. And the trick of a founder is to be able to get as quickly as you can to get other people to run the company so that you can go do the work that you need to do. So I am definitely the vision guy. I meet with the team and cast vision over what the industry needs. And then I fly around shaking hands, kissing babies, and golfing a lot. So I have two people that run the company. Thank you. I have 2 people who run the company, and they basically make all the decisions. They bounce stuff off me, but yeah, I'm to the point where they are running it. And so I really just fly around speaking. I fly around golfing, meeting with clients. I was just out in Vegas. I should have called you, dude, but I was so slammed this last week.
Oh, we were busy.
My third Vegas trip this year. But I was out at a client's leadership meeting and just chatting up with them, and golfed over at Arroyo. Great course over there right next to Red Rock. So yeah, I just get to do that stuff. But yeah, as far as like directing, this is where we need to be going, that's on me.
I love that, man. And what do you see as the vision for the mortgage industry? Like, where do you see it's going, right? Because I'm of 2 thoughts. Technology should make it easier and easier and easier to do a loan without a loan officer. And it's like, I don't know how any deal gets to the finish line without a seasoned loan officer or a seasoned realtor just holding together the emotion and the rowing of the boat. So it's like, maybe we're going to, using the boat example, maybe we're going to lose a lot of rowers over the next 10 years, but I think the boat still needs a coxswain to make sure that it's like, even the technology is rowing in the right direction and it's going the right direction and we're steering the right way. It's like, what do you see as, like, whether it's your company vision or like going to the 30,000 foot view of the mortgage business, across the board, what does your crystal ball tell you?
For the mortgage industry, I think we do. And what's funny is what I'm about to say, we're going to look back at in 2 years and see if I was right. So it's always funny when you make predictions.
It's nice to date stamp this stuff.
Thinking of 2026, Ken, looking back at this going, you're an idiot or you were super smart. I think for a while, we're still going to need loan officers. I think they'll be needed for a while. I mean, there's something called, what's the easy tax system, TurboTax?
Yeah.
I don't use TurboTax. Like there's a need for a lot of the bigger work to be done when thinking is involved. And so, yeah, you can use tech for a lot of things, but still putting that deal together and making those connections and having those people trust you. People don't trust AI for anything right now. So I think we're a ways away from that, competing with real loan officers without real loan officers being part of the transaction. So I think we're still on that. I think it's still a relationship game. And so if I was talking to a loan officer right now, I'd be like, go build more relationships, like build more solid relationships, because that is still the thing. You have to think of like, what do I have that AI doesn't or that tech doesn't?
Right.
And then focus on those things, right? Because you can make a video right now of this podcast, and deepfake could pretty much pump out a pretty solid content with you and my and your face as the people, right? So then what do I have? If information is super easy to gather, then where do I come in when it comes to teaching, right? Do I need to teach you when everything could just be found for you? So I always have to look at, it's a good thing I deliver well, right? It's a good thing I can stand up in front of an audience and make people laugh and keep them engaged. Because if it's just information, that's like the only business you're in, you're screwed. Because information and information gathering is done.
You would love talking to my buddy John Israel. He's a coach, public speaker, wrote a book called Mr. Thank You, and he has this lead framework that he trains on, where he's like, as humans, the only thing that we can really never get replaced on is leadership, individualized education, advocacy, and delight, making it fun, right? He's like, so somewhere in your mortgage business, you better be bringing in leadership, next level education, which can probably be automated and videoized. That's not even a word, but you get me. I did my idea.
It is now.
Advocate for them, right? Like try to be an advocate to help them understand the cost of waiting and why they need to be a homeowner and how, helping their offer stand out. And then you got to delight them, right? You got to make it a little bit fun. It's so funny. Today I was doing a buyer consult and I'm doing them on speakerphone because I brought in a new team member and I want her to see how we talk to clients. And there's something just more like, there's more self-awareness when you're on speakerphone and the sound's kind of filling the room or whatnot. So I'm really hyper aware of what I'm saying when I'm on speakerphone. And I was trying to bring some jokes and some personal touch to the conversation. And I was also trying to show that I had local area knowledge, the area they're buying. I grew up rollerblading and a street that they're looking at an offer on. I've lost a lot of skin on that street, chasing down Adams Hill on rollerblades. And I'm like bringing some personal stuff to the conversation. And the wife was totally into it. She was laughing. She wanted to know more about the neighborhood. The husband didn't want to have anything to do with it. He's like, well, tell me about why you're better than the credit union and why you're better than these people. And I'm like, and I finally just had to say hey man, at the risk of losing this deal, I just have to tell you that the rate's probably the 10th most important thing when we're looking at putting together a loan. I understand, shame on our industry. It's the only thing that we have taught the consumer to ask, but you guys have a really unique situation. It's a little janky, I didn't want to insult the guy, but I was like, one of you doesn't work, AKA the husband. I'm like, the wife makes all the money. And we got to find a way to really piecemeal this together. Oh, and then by the way, you're low money down in an area where every property is getting 20 offers. So if you think you're going to go through the credit union who's open 9 to 4 and can't send pre-approval letters on the weekend, and et cetera, et cetera, et cetera, this is why we might want to work together. And I think I finally won him over, but it was just weird because I was trying to bring a human aspect, and this guy wanted the AI. He just wanted to put 3 things in a column and compare them, and he's not going to be my client. Hopefully the wife who makes all the money, who enjoyed the entertainment of the call, makes the decision and says, no, we're going with Scott. But it'll be interesting to see whether I get that deal or not. Because one of them really wanted the human experience. The other one was I'm filling out my spreadsheet. I'm going to carry the one and go with the one that's the cheapest. And I'm like, yeah, then I'm probably not your guy. You'll always find somebody that'll do it cheaper. But anyway, I digress.
The trick you got to figure out is you're right. I love that you said that we've taught people to think of the wrong thing. We've also taught them to think of us as a one-time purchase.
Right.
And so that guy's like, I'm acquiring something. I'm going to use you to get that. And we're not going to talk again. Their brain doesn't go to, you're going to be a support person for me in my financial world for the next rest of my life. We don't communicate that effectively in mortgage. Right? If you were to say, here's who I am for you for the rest of your life. You came, welcome home.
Right.
I got you. Here are the things that I do every single year for you to earn your business for every single deal we're going to do. We're partners now on your financial business. For your financial world, I'm your partner.
Yeah.
And so instead we're just come get this rate right now instead of here's what we're getting involved in, because then the personal stuff matters a lot more.
Right.
Right. I want a good relationship with somebody. If I'm going to be sending you business or sending you my business or using you, I need to like you.
Right.
And I need to know, what is our over your career experience going to feel like?
And you mentioned, obviously enterprise accounts are the holy grail for you, right? Because you knock down 200 stones or 200 birds with one stone. But when we think about if you were just pitching an individual loan officer, what is the value that you bring to the equation? How, the typical, how are you going to help me fund one extra deal a month? Right? I can look at Home IQ, which a company I invested in. I'll be like, all right, if I send out, property valuation reports every month to 900 people, a couple of them are going to buy, become repeat clients, stay in touch with me, remember my name, buy their second home with me, whatever. It's a little bit more esoteric when you're like, I'm helping you be smarter and solve problems.
Mhm.
But where's the pickup for the individual loan officer who might want to invest in like Coop Plus because they're like, I want to be able to fight back against the underwriter. I want to be able to research guidelines quicker up front. Like, where's the pickup for them?
It's knowing you have a source of the right information in this industry. You know, I see stuff on Facebook, people getting advice on Facebook that's completely criminal. And I'm like, you're listening to criminals. Like our whole pitch is that we're a place that we're not going to lead you astray. We're going to bring the best experts that we know within the industry, and we're going to teach you those things you need to know to be successful in this business. And you can trust it.
Right.
And then building community in there is also pretty awesome. We're connecting people. You can go in there and set up a profile. You can, it really is a collaboration of people. So go get the right answers from the right people and let us help you, learn, grow, and win. So it's definitely, that's our push, is just come for the right information.
Yeah. Do you know what I have wanted as a plug-in to my coaching program? And maybe you can put this on the roadmap somewhere out there. I would love a plug-in fee-based underwriting decision. So it's like, I'm having a problem with my underwriter understanding XYZ, and I can plug into like Mortgage Coop for consolidated coaching and be like, hey, here's all the parameters of my deal. Here's the guideline we're stuck on. It's $29 for an opinion letter from the Knowledge Coop of like, no, you can do this because there's these two competing guidelines that kind of overrule each other. And if you do this, if you carry the one, divide by pi, do this. It's like there should be a way to get this done, right? And I don't know if you want to piss off all the companies out there by telling them that they're wrong. But like, if we ever go to a fully independent model, I would love like an opinion letter, something that I've paid for before, $200, and I refresh this letter every few years. I get an opinion letter from like one of the number one estate attorneys in California because every client's parents want to fight with me. No, Scott, you don't know what you're talking about. If I give $100,000 gift to my kid, I'm going to get taxed on it. It's like, no, you don't. You go to the maximum state exemption. Are you going to leave your kids more than $13.6 million when you die? No, we're not worth that much. Okay, cool. So here's what you do. You file a gift return. It's not taxable to you. It's not taxable to them. It's just informational. And like I have this video recorded. I pay for an opinion letter from an attorney so that I can show the parents, no, your dumbass accountant in Sandusky, Ohio is wrong. They don't understand the gift tax code. And like, I would love to have something like that on demand for like underwriting guidelines.
It'd be awesome. But imagine a loan officer handing an underwriter something saying they're wrong and they told other people about it. And the other people think the underwriter's wrong. And then tell me how that underwriter handles that.
Yeah, it's not going to go well for your enterprise accounts.
Yeah.
All right. If you ever think about spinning up another business under another name, let's talk about it. I'll invest in it. Hey, man, I appreciate you being on. And we finally made time for this. We both had children with pressing needs from their father. So we had to reschedule a couple times. Yep. But I always like to leave the conversation with a couple questions. One of them is, we're recording this in March of 2024, but we're a couple months ahead because my guy's going to like Europe for a month and everything. So this will probably come out right before the summer of 2024. What are you personally, professionally in the industry looking forward to going into the second half of 2024? And then I'm a big movie fan. I feel like I can learn a lot about people from what is your favorite movie and why. So those two questions, man. What are you most fired up about? Go for it.
Things not sucking anymore. There's so many people that want to buy houses, and that dam's going to break, and it's going to be booming. And so I'm really looking forward to the industry getting back up.
Talk about it. How is that dam going to break? Do you think we're going to get more financing for new construction? Do you think rates are going to drop?
You don't want to know what I think. I think the values have to come down a little bit for that to work, and I don't think that Americans care that their value has dropped any. And we all are sitting on massive amounts of equity, and so I think we need more houses on the market, but we need the prices to come down. I think that's the rub right now.
Okay.
But I also think that the election is going to help with that, because then that uncertainty goes away and we'll be able to move forward. So I'm excited about that. My favorite movie of all time is Good Will Hunting. And it's because of the depth in that experience of somebody who's got all the potential in the world and fights against his own success. because that was the story of my life until I got married and got some things figured out. It was fighting against my own, sabotaging my own success. Because what if I try and it doesn't work?
Yeah.
And so I really connected with Matt Damon in that. I, of course, love Robin Williams in that. This year's CE, we do goodwill lending.
Nice.
And so we have a loan officer who has a therapist, and he's like, I just thought May 10th the rates would go down. And he's like, it's not your fault. He's like, I just thought so yeah, it's gonna be awesome. But that's hands down my favorite movie.
Such an amazing movie, man. And like everything about the young relationship between Matt Damon and Ben Affleck, like it comes through in the movie that they were already best friends who were like doing shit together. Cause at some point they're not acting. They're just like, they are who they are. And like the chemistry in that movie. And then, people don't know that was a little tiny indie film, low budget, how they talked Robin Williams into doing that, who's at like the height of his career. I mean, they caught lightning in a bottle
from Yellowstone.
And who?
Rip from Yellowstone.
Oh, I don't watch Yellowstone, so I don't know which character.
Oh, dude, he's in that.
Oh, okay. Is he his friend who rolls with him? Yeah. The movie's just it's excellent. I need to put that on the rewatch. It's been a long time. Good Will Hunting. And is it Minnie Driver? Is that who plays the girl? Yeah.
Yep.
Yeah. I liked her. She had like a girl next door kind of hotness to her.
I know. Totally.
Hey man, well, thanks being on. And then anytime that you guys have updates or there's like industry news that you want to talk about, we'd love to have you on, because obviously we're moving the On the Edge podcast to more like business centric, mortgage updates, real estate centric stuff. So just hit me up anytime you're going to be in Vegas, and we'll finally do this in person and have a cigar together.
Dude, we'll do it. That sounds awesome.
All right. Talk to you soon, man.
All right. Thanks, brother.
Later. Hey, so I think we're like legitimately 2 months ahead. This will probably come out April, May-ish.
Okay.
And then we'll email you all the information, all the clips, all the raw files. We'll tag you in social media, all that type of fun stuff.
Nice. Dude, I'm at 2% on the battery life. That's so funny. I was like, do I need to go get a battery? Do I need to go get a charger?
Kill it. All right. Talk to you soon, man.
All right. See you, buddy.
Later.
Thank you.